Hey guys, it's Steven. Got a Bytes chart update as well as my position update for this video. Just to go over where we left off. We left off a couple days ago here at about $11.60. And as you can see, these pivot charts are playing out very well. So I'm not sure if somebody's watching these and trading these, or it's just the math that's working out well. But we have this the weekly central pivot here where the price moved to very nicely. Like I say, the central pivot tends to act as a magnet. So that's what we see here. And as you can see, it acted as resistance. So we now have this resistance and we're just going to go ahead and test some support now. So we could see this $9.80, which is the first support, come into play, especially if we start to see the overall markets turn bearish over the next week or so, which I do think is a very high likelihood. So just to move on to the bytes to Ethereum ratio, um, where we left off on the 8th about this price here. I was relatively bearish. I mean, not bearish, but bullish because I had this position here that I just left in. It was my liquidity mining position. And I was pretty confident that we would come up and have this act as some sort of magnet. So I was confident that we could get at least one more run through my liquidity pool here to get some more fees. And I did end up closing that position. The reason why I closed it is I wanted to be a little bit more conservative with my ranges. I wanted to basically be able to provide more liquidity down to a lower price. So that's what I did. I went ahead and actually closed this position, and I actually sold all the bytes that I have. I did that just because I wanted to just put in a conservative position to where, this 0.005 on the ETH ratio, I felt like if the price stays above there, I'm in a good position because I'm earning bytes about 4 a day. So I'd be happy with that. And if we just stay above that, and then I just wanted to hedge myself and protect myself from the downside. So I basically went ahead and sold everything. And then I turn that ETH into buying orders, basically. So a few things that I did. The first thing I did was start a $5,000 position. That's where ETH was. That's what ETH was worth when I started this position. So I got the top of the range just at 495-ish, 49. And I also have the bottom of the range down to 42. So we have this 49 to 42 range where I feel like I wouldn't mind the price moving down here. So I'm basically just preparing for the worst. And another thing that I did with those profits, well, actually, let's just go ahead and just check up on how that position is performing. So overall, due to the cost in gas, the price is down. So as you can see, it's been a day here, and I've only gained about $45 in fees. And if you've seen any of my previous videos, you'll know that the way I concentrate my liquidity, I'm able to get a very significant amount of fees in a very short period of time because of how aggressive I am in keeping that liquidity around the price. So like I said, this is a much more conservative way to do this. So it's going to basically I'll be able to hold this position for a longer time frame in theory, as long as there's not too much volatility. So I'm just and it's just a different play, and you're not going to make as much fees, but you are protecting. I would say you are protecting your downside more because you get more exposure to a long-term fee structure there. So I'll keep you updated on that. So it's been about 1.3 days here, and I'm sure this will turn positive because basically, I'm right in the middle of my range almost here once we get to 46. So yep, that's basically all I got on that. And let's just go ahead and check the volume. Super low right now. So as liquidity providers, that's definitely playing a role in why we're not seeing a bunch of fees right now. So Yeah, hopefully we can start to get something back, because right now it's just been pretty weak. So checking in on where the liquidity is, and this is also playing into my strategy, where I see these ranges here. Um, I felt that there's just not enough liquidity to absorb the upcoming selling pressure, especially if the market's turned bearish. So that's why I went ahead and set up my positions all the way down to um, about this range here, about 44, or yeah, 41 on the ETH price. And yeah, so that's basically it. I wanted to be the buyer of this dip and not the seller, and not have my funds ready to buy. So that's what I've done there. And then another thing that I wanted to talk to you guys about, I might have mentioned it before, but it's this new decentralized trading app, which is called Kromatika. So and I am using that right now. And just to quickly say, this range right here, I have about half of this particular range at 0.0042 ETH for Bytes. Half of that's about mine. It's just a limit buy order using the Kromatika app. So it's a very cool tool, and I want to show you guys kind of just a quick overview of how it works. So if you check out their Twitter, Kromatika.finance, they've got a pretty good example of how their system works. So basically what they do is, you know how we like to talk about using liquidity pools to buy and distribute tokens. This app does it for you automatically. So what you can do is you can set limit orders, and what it does is it creates that pool for you, which it did for me here. You can see it created this pool position, and once the token gets to the price that is determined, it will go ahead and close that position for you. So a really cool way to set limit orders. And another great benefit is the fact that you are gaining fees as the price is moving around that that limit price order. So just to kind of get into how that works and how you can use it to advantage, this is just a strategy that I thought of. Because these are about 1 to 2%, it's actually about 2% ranges, these particular blocks. What they're doing is they're setting in one block, right? But what you can do is you can basically either pick the top or the bottom of that block. So I'll just go ahead and use this as an example. You'll see, if you see where it says Bytes price, and underneath that it says the ETH price. So you have the ETH price at 239.78. And then the next block you have 235. So if you do 235 divided by, we'll just call it 239, even though it's more, almost 2% difference. So what you can do is basically just put the limit order at the, if you're buying, you put it at the bottom of this range, right? So for example, we got the top of this range is 244. So maybe you would 0.6, and it goes to 239. You can maybe put it just outside of this range, right? And then just at the bottom of this range. And what happens is you're going to be able to gain more fees as the price gets closer to your pool. So it might get filled quicker, but maybe it doesn't, right? And maybe we get a little bit of trade action in this particular range where you're gaining all these fees until it goes back to this next down level here. And once this moves down below here, your limit order is filled, right? If that makes sense. Once it hits the market price, it'll go ahead and fill that. So just a really cool strategy. And they're also going to be releasing like a free version. Basically, it's going to be free trading. You just need the Chrome token, and they're also on Arbitrum, Polygon, and a lot of cool stuff going on. And on me working through Umami Finance, I was able to actually reach out to this company, and they were kind enough to spend their time with us. And we're going to maybe possibly try to get some partnerships and work with them, because I really want to implement this into our Umami treasury strategy, is how we accumulate tokens. So yeah, this is a really exciting tool here, and this really just goes around what we talk about on this channel, and using liquidity pools to accumulate and distribute. So yeah, just an example here. Someone did a buy order of 4 ETH, And if you see what would have happened if you had a limit order, it would have only been 53,192. But instead, because they were able to gain all these fees, they were able to get 55,482. So almost a 10% increase in their fill. So like I said, a super cool tool. And I guess the only downside is you can't do instant swaps with this. You have to let the price move like a couple percentage to get those orders filled, and that's just how the limit orders work. But if you're okay with that and waiting, this is a really awesome tool. So I wanted to get that out to you guys there. And yeah, so we'll see. Maybe so I have this range here, and then what I want to do is if it gets to the bottom, I can go ahead and basically just have this buy order and then take my bytes out. And then I've got basically 200 byte buy right here where I sold high and I buy it low. So that is the plan. And let's just go ahead and check in on the holders down about 4. And there are some claims on the tokens about 1,500. And the price is about the same as where we left off yesterday or 2 days ago. And just to get off to the macro overview, so we left off on the 8th here, and I was talking about how I'm still pretty bearish, and I really think that now, especially, there's a basically I would say over 90% chance that we're going to be touching under 37,000 here. So with the FOMC, and you've got Biden's executive order for crypto, there's a lot of fear in the market. So not a bad thing. All this is just an opportunity. So as of right now, I am hedged short. I am using Tracer DAO and Arbitrum. I can go into that a little bit more. They're one of our partners on Umami Finance. So I'll use that for a different video. But yeah, simply just head short here, and I'm ready to go ahead and buy this dip when this happens. So I think there's going to be the best opportunity if we can get it. Maybe around $32,000 would be a great opportunity, and all the way up to $35,000 I think would definitely be in the realm of possibility. So yeah, we'll just go ahead and keep an eye on that. And yeah, same would be true for Ethereum. And let's just go ahead and check over the overall markets here. So a little bit of worrisome, the fact that we are seeing the treasury yields go higher. So we're having definitely some money come out of the bond market. So that means interest rates going up. And this is with the FOMC most likely going to raise the interest rates by about 25% basis points coming next week. That's the consensus. So we're going to be seeing a rate hike here. So just a little bit of uncertainty here, but overall, with this money coming out of the bond market, we are starting to see some stabilization in the overall market. So yeah, like I said, we left off here, so we are higher than when we left off a couple days ago. So overall, we could definitely get some more red. That's what I'm looking for. I'm going as far as timing. I would think we could have definitely a red Friday. You could even have a red Monday, and I'm going to watch for Tuesdays. Tuesdays are pretty important for me to keep an eye on the overall health of the market. So we'll see what happens Tuesday. And if we have a weak Tuesday or a couple days, maybe we just have a bearish week, and then we can restart not maybe on the 28th, to finish up March. That's when we can start our bull run. That's just kind of a timing thing that I'm trying to figure out here. So we'll just work through that. And yeah, we definitely want to see this stabilize a bit. But overall, there's really no problem with this. I would say that the interest rates are just going to maybe go up to about 2% and just stabilize. So that's basically what's happening right now. We're just moving the interest rates, and I think everything will be just fine. So just to finish off, we'll just go ahead and check in on how the Neo Tokyo NFTs are doing. So the floor is pretty cheap right now. So what we're seeing is a lot of turn and burn within the community. We've got the people who just aren't there for the long run getting out, and we've got some really great talent coming into Neo Tokyo. So this is just an opportunity to build, and that's what we're looking for. So relatively cheap to get in, so about 35,000, and elite citizens, that's fine. The S2 floors are at $10,000. That's just fine. I'm happy with that. And yeah, so and then we got the season one yield 4. That's what I have here. And 50,000 is definitely a little low, you know, because I'm using some simple calculations. Um, and that is, you know, if say this is, you know, you have a $50,000 NFT, which is essentially an asset that's creating 4 bytes a day. So even though we're at 11 bytes, let's just assume that we're getting 4 bytes a day at $10. That's $40, and then 365 days a week, 365 days a year. You know, we got almost $15,000 um, a year just in passive income without doing anything. And that's not even counting the fact that you can yield farm these and stuff like that. So, you know, that's basically about 25% a year. So I feel like that's a stable investment. Especially at 50,000. So yeah, if you were to calculate this, because 25%, so let's just multiply this by 4. Yeah, so at 58,000, you're making 25% a year. So as long as you're buying under 23, you got a pretty solid investment long term, in my opinion. So I do expect these once we get the bull market get going, these are definitely going to get swept up, and then we get back to a better evaluation. I mean, look at this. There's only 4 on the market here, and then look where the next one is, 122,000. So we're definitely going to come into that scarcity mode again. So I'm going to be looking for that. So I just wanted to point that out, and I'm going to go ahead and finish the video here. So if you have any questions, let me know, and we'll catch you next time.